Alright everybody, I think you're going to really enjoy today's video. Today we're going to dive into the nuts and bolts of trading divergence. If you don't trade divergence yet, I think this video might just make you a believer. And if you do trade divergence, I think you might just come away with it with some little details that maybe you didn't know about trading divergence. So I learned this approach from the great Jake Bernstein, one of the all-time greats in trading. So basically what we're looking at with divergence is we're looking at when price is doing something differently than the indicator. So in this case, I have four oscillators down here. I'm not going to go into the details of the settings of the oscillators, but what's important is just teaching the concept in this video for me. So we see here the red lines mark price making higher highs. Here, the oscillators making lower highs. So that is the divergent setup. So to be clear, there's different stages of trading. So first you have a setup. So this is the setup when you see the divergence happen. But that does not tell you to get into the trade. So this is where I think a lot of people don't know about divergence is actually the trigger. What confirms this entry into this divergence trade? So when you get a divergence on price, like we've seen here with the oscillator, for bearish divergence, so this would be a bearish divergence, this is a sell setup. What you do is you mark the lowest low on the oscillator. In this case, I've marked them each with black lines. That is the level that the oscillator will need to close beyond on a closing basis on whatever time frame you're looking at. So in this case, we're looking at a daily chart. This level, 237.7, would need to be closed beyond on a closing basis. So you can see here that on this day, Tuesday, July 16th, the MACD closed at 229.85, and you can see the numbers over here. Okay, so that is the entry on the close of this candle. So that is the setup. We've gone through the setup, identifying the divergence. We've gone through the trigger, which is the closing basis beyond the extreme that was formed on the oscillator during the divergence. Now, what is the target? So what you do is you take the full range of the price made during the divergence, and you tack that on to the close of the candle where the divergence triggered, okay, which was right here. So that means your entry is here, your target is here, and here. So you have two targets, halfway and full. Okay. Now for stop losses, Jake Bernstein taught to use basically the same amount of space as this, and that for me is just too big of a stop. So I like to use 2 times the width of the moving average channel. That's this right here, 10 high, 8 low, or 150% of the 3-period ATR, whichever is greater. Okay, so that's it basically in a nutshell, how to trade divergence. This is one of my favorite entry techniques. It's often the first entry technique that will get me in. Now, I don't just trade these willy-nilly. I like to incorporate them into a higher time frame perspective using commitmented traders or a higher time frame moving average channel strategy for entries. But let's just take a look at them, and what you want to do is just go through the chart and practice identifying these. And I've just done a quick job of them here, so you can see down here, price made a lower low, while the CCI made a higher low. I've marked out the highest high that was formed on the oscillator during the divergence, and that was negative 84.61. Then when we see we get a close beyond it right here, which was at negative 72.53, that's our entry right there on the close of that candle. How do we determine our targets? Take the full range price made during that particular divergence, and we see that we've hit target number 1 and did not quite hit target number 2. Okay, so that's it. That's divergence in a nutshell. Identify price doing something differently or diverging from the oscillators. Mark the extreme formed on the oscillator during the divergence and wait for a close beyond that to trigger you into the trade, and then your target is half and then full of the price range that was formed during the divergence. So that is it. This is one of my favorite entry techniques that I trade. If you have any questions about other entry techniques or this strategy, you can feel free to shoot me a message. I hope that you found this valuable, and if you did, please like, share, and subscribe. I hope you guys have a great week, and good luck and good trading.